Good evening. In another episode, I bet you didn't know there are three types of income. And the top, what most people earn is called an income, and that's why they have an income tax. And the income or earned income is taxed at the highest levels possible, and that's what most of you, the working poor, have, is income. Then there is investment income. You buy a stock for $10. You sell it for $25. You make a spread of $15 profit. And that is taxed at a short-term and a long-term capital gains tax that we will take a look at here in a minute. Then at the bottom, the letter, there is called passive income or cash flow. And this, my young man, my good gentlemen, and ladies, is what the rich and the highly educated in monetary policy, they use cash flow. Or as we take a look deep into the tax bracket of the earned income or the working poor tax, that I call it the uneducated on how money works. And the rich, the rich know how money works. If you take a look below, the tax bracket for 2022 for the working poor is 37% at the high end for a single income earner in the income tax bracket, the federal bracket. And if you look at the lowest end, at the bottom of your screen, it's at 12%. And then you have a 32, a 35, and a 24. And that is how the working poor remain poor, because they pay the highest income tax and the highest tax bracket possible, no matter what the laws, no matter what the legislation is passed in order to wink, make the rich pay. If you see now at the bottom of your screen, we take a look at the portfolio income tax. We have a short-term portfolio income tax. Yes, we do. And that ranges from 10 to 12 to 22, 24, 32, 35, or 37% tax based on what federal income tax you end up in for a short-term capital gains. Now, long-term capital gains, if you hold stock longer, hold stock longer. Have some hard hands, diamond hands, hold stock longer than 1 year, 364 days or longer. On day 365, you pay a short-term capital gains tax, right? And that is between 0, 15, and 20%, but is often changing by legislation. Now, if you take a look at how the rich do this, the rich borrow money. They don't generate an income, so they don't pay an income tax. The propaganda is spread through the elite that understand how money works, tells the poor, the working poor, they're going to make legislation against the rich to pay more taxes and give you free benefits. Well, the rich borrow money. When you borrow money, it's debt. Debt is non-taxable, and they use that to buy assets. And the assets send them cash flow each month that they reinvest into more assets that generate more cash flow, and they pay zero taxes because they borrow even more money against said asset to buy another asset. That is how this works. The secrets were revealed for you, the beautiful people, on how the rich do it.